All right, welcome everyone. This is Bob Mauer. It is Wednesday, the 26th of November, around about 2 o'clock my time. Want to do an update of the current seasonal futures spreads strategies, see how things are looking for the ongoing spreads. There won't be any new ones for a couple weeks. We'll take a look here, but I'm going to be out of town, so I'm not going to get into anything new unless I know I can watch it, and I'll be in an area where I may not be able to have access to the internet at all times. So that being the case, we're going to take a break for a couple weeks at least on new strategies, but we'll play out the ones that we're in, and I will advise accordingly if something needs to be changed via email. So let's hop on over to it here. We'll dial into the portal. You'll see the most current PDF version right here, uploaded just a bit ago. And note here, please note that I'll be out of town, like I just mentioned, and I'll let you know if there's any changes via email. So I'll be back in action the week of December 15th. All right, so that's that. Let's look at the PDF here and see where we're at for this week of 11/24. Okay, so we've got bear spread in crude, number 332. Bear spread in heating oil. This one is filled. Remember, I revised previously the entry date, the entry price to 551 only, and I am tweaking the exit price, and that's going to change the risk reward. So we'll look at that real quick. 336 bear spread in corn, that one's working. 337 nat gas, this one got stopped out. We'll look at that one. 338 bull spread in cotton, flat. We reached the target one. 339 bear spread in Class 3 milk. I'm going to recommend we cancel that one. It basically did what it was supposed to do, but without us on board, unfortunately. And then 340 bull spread in oats. We'll see how that one is looking. Okay. So those are the 7 that we had working, and we are down to, with the 2 that are flat and the cancel one, we're really down to 4. Okay, so let's get over to the charts. Take them one by one here in order. Strategy number 332, the bear spread in crude. And this is what we're at right now. So the market had filled us back several weeks ago when it touched 36. And I know some orders got filled. That's why I was walking the forward as if we were filled. We got within one tick of hitting that first target. Data at that point still suggested lower. That's why I stuck with it. But since then, it's bounced again, unfortunately. Got up to the white line here, 200 period moving average. That's what that is. So anybody who had not been filled before is now filled as of a couple of days ago and yesterday. We rallied through 36. And now it's pushing down. So we need this thing to revisit its lows and hopefully push through the lows. That'd be the greatest thing, right? Data still looks supportive for being bearish, and target 1 does not seem out of range, so we're going to keep that one there. Might end up pushing this target 3 up a little bit, or maybe just canceling it, but targets 1 and 2 are still in play. So we just need this thing to revisit the lower end of the range, take out that little low from a couple weeks ago, which came really close, got down to 12. And then we should be hopefully good, right? So this one's all going according to plan. Kind of wish it would have just kept breaking down here rather than have this little recovery. But a lot of the energies had a pretty good pop to the upside over the last week or so. It wasn't just crude oil. And you'll see it in heating oil too. So that is strategy 332. Currently sitting with some level of unrealized gain. Entry level 1 only is filled. Entry level 2 is still waiting on the sidelines. Targets are saying the same. Next up, 335. Okay, so I revised this one, as you all know, back on November 13th. And we went from basically a 2-entry strategy setup originally to a 1-entry only. And we're still keeping the 1 entry Okay, so that didn't change. That revised entry level back on the 13th was 551. Thank goodness we changed it, because we'd be sitting probably with some level of unrealized loss. But the data was suggesting that it could pop higher quite a bit, which is why I changed that for you guys and for everybody involved. And it got filled today. So we had a high of 560 today. The entry level is 551, so everybody who's following along with this should be filled. What I'm changing is the targets. Obviously, when the benchmark is down here at 176, these targets originally looked pretty feasible based on my interpretation of the data. Target 1 had been 64, target 2 negative 50. We need to raise those because we're obviously starting at a much higher point. And really the new benchmark when I revised the data for these targets was done on the 22nd, and that was at a price of about 440. So significant difference compared to the original benchmark. So that being the case, we are going to cancel the original target 1 at 64, replace it with the revised target of 295. We're going to cancel target 2 at negative 50, replace it with target 2 at 196. Okay, so those original targets are moving up substantially because basically our starting point effectively is started higher. All right, so filled, currently sitting, although this is a whippy market, so I say this highly hedged with a lot of qualifiers, that we're currently sitting with a unrealized gain in the heating oil and no new changes aside from those targets getting raised higher. Okay, so that's where we're at. And obviously when you change the targets, you're going to change the risk reward. So this is the comparison between November 13th and November 22nd. Risk is staying the same because I didn't move the stop relative to the entry, but our targets are offering a bit less in terms of potential profit. So about half for target 1 and about 60% for target 2 is the new potential profit, give or take, relative to where it started. Okay, as you can see, we came out of this bit of a triangle formation here. Market pushed higher. If I were to do my old math on classical technical analysis, 329, about 330 points higher would be a target, which would be about 500. So right in about this area would be a target for a push to the upside, in my opinion. And we got through that a little bit more, at least. And we'll see what happens, right? So basically, breaking out of this triangle kind of hit a area that would have been an expected target, in my opinion. And now we'll see if this thing wants to start faltering here. Okay, white line is the 200 period moving average on a daily basis. So that's provided some overhead resistance. And that is where we're at. So again, filled, sitting with some level of unrealized gain. Targets have changed. I'll let you know if anything else changes. Corn, strategy number 336, only had one entry level from the onset. Filled, had a challenge of our stop a couple days ago, got up to negative 2.5. Our stop's at negative 2. And right now we're sitting at about break even. So we just need this thing to start faltering, push on lower. Of the three major grains, let's call it wheat, corn, and soybeans, corn does have the relatively best story, but with the continued weakness in soy and wheat, it's having a hard time really grinding higher any faster. So let's just hope it stays that way, and we'll look for this thing to falter. So about break even right now, filled, and no change to the strategy. All right, bad news first. Natty Gas got stopped out. This is number 337. Filled about an average of 270 was the price. If you averaged in, your risk would have been 860 per spread. More conservative, only entry level 2. risking 250 per spread. Basically, this market had a big explosion, more than the back data had interpreted or expected it would. But I'm glad we had a risk where we had a risk. Got stopped out at 314 after this big push to the upside. Kind of made us look like fools a couple days ago when it just backed off down substantially. But then again, retested it, that 314 stop level yesterday. Faltered a bit today. So who knows how it's going to play out. But we are out. This one goes down as a loss, unfortunately. 337. Countering that, luckily, happily, is cotton, which is a winner for anybody who got in on entry level 1, which was pretty much the benchmark at 251. So this market pretty much moved sideways for about 7 or 8 trading days and then had a really nice uptick over the last 3 or 4 days and got through not just target 1 but target 2 also. So if you stuck around for target 1, you would have made $240. Target 2 would have added another $90 or so. You would have been around 330-ish. And we'll see if we can get to negative 187. It is the day before a holiday, really, and things are going to be quiet for the next 3-4 days as we head into the weekend, get through the weekend. So maybe there's a little profit taking today. Maybe come Monday, it has another push to the upside. Okay, so this one basically did what it's supposed to do, though. So it's going to go off our board and as a winner of some level for those who got in at entry level 1. All right, so this one is done. And again, if anyone wants to stick with it and see if it'll stretch to target 3 and you want to strategize, feel free to reach out. All right, then we've got dairy. Class 3 milk, which we rarely trade, but nonetheless, this set up pretty nicely, and I wanted to get on board. So we were trying to get short at 11 and 28. So we needed a bit of a bounce out of the gate there. And he got a bit of a bounce, but not as big of a bit as we needed. And then the market just collapsed. So basically this did what it was supposed to do, got through target 2. It's unfortunate. It would have been a nice little quick winner, even for just the level 1 traders, of a little over $1,000 if it just popped up a little bit more and then broke. But it did not do us that favor. And basically because it did what it was supposed to do and the risk reward don't look the same moving forward, I'm recommending that we cancel this strategy. So cancel strategy number 339. All right, that's my recommendation. So that's going off as a non-event for us. And then we've got the last one here, which is oats. Bull spread. Strategy 340, bull spread in oats. Entry level 1 was negative 3.5 is the price. Let me see something here real quick. That line just didn't look straight. There we go. Negative 3.5, and their benchmark's negative 2 3/4, and the negative 3.5 should be filled. At least that price may be better, depending on how you decide to get in or when you decided to get in. The market broke down yesterday to negative 4.5. So only ones that are in is the entry level 1 traders. Entry level 2 unfilled yet. Stop is still negative 8.5. Target's still the same up here at positive 0.5 and positive 2. Currently should be sitting with a real modest level of unrealized gain. And this market can be quite choppy, which is why the margin requirement is just shy of $2,000 for a market that's only got about a 10-cent range, $500 range. So bear that in mind. Okay, so that is oats spread 340, level 1 filled, currently sitting with some modest level of unrealized gain and no change to the strategy. All right. Well, I think that brings everything up to speed. 3 of those 7 spreads are off the board, either because we got stopped out or we hit our profit target, or we just got canceled because it did what it was supposed to do, but unfortunately without us on board. So that is that. And again, keep looking out on your email for any updates I might have, even though I'm going to be out of touch on a day-to-day basis as easy as I could be. I'm still going to be obviously paying attention to the markets because we've got those several spreads on. All right, so I'll be watching. Don't worry about that. Okay, so I'm going to leave it there. I appreciate your time, energy, effort, and everything we do here. And I hope you've got a nice Thanksgiving set up for yourselves and a nice long weekend, perhaps. And we will pick it up again in a few weeks. And thanks so much for watching.